So we are live set up on YouTube. We'll wait a few minutes and then. That's where we do. I'm sure someone was on there, but I'm not sure.
Robin's on and
Yep.
Brad's on
Yep. And Mandy's on.
and he's on. Fever.
He was on and then.
You say Maddie's on?
Yep. She's just a little further down.
Okay.
Yep. She's
Okay. Is Mark on?
I'm just gonna give him a call.
Presented. Right.
Right. Hey Mark, this is Emily. I just have to accept you as a panelist, so if you want to jump back on, I should be able to get you.
Are you able to hear me?
Yes.
Okay. Okay.
Are you able to hear me?
Yep, we can hear you, John.
All right, thank you.
Do you want me to try to resend it to you? Do you just want to click out of everything and then I can resend it to you? Okay. Yep, I can resend it to you. Okay, cool. Close completely out of your browsers and then try it again. Yep. Yep. Yep, you're good on that. You can, yep, you can type that or you can enter that. Okay, try that. Yep. Mark.simmons@westfargoND.gov. All right, Simmons has joined, so it looks like all the commissioners are on here, and then I'll let whoever was gonna take over, take over.
Good morning. We're going to call the March 25th, 2024 special meeting with regard to the presentation of the 2022 audit by Eide Bailey. Madam Secretary, would you please call the roll?
Commissioner Jardis.
Here.
Commissioner George.
Here.
Commissioner Anderson.
Here.
Commissioner Olson.
Here.
Commissioner Simmons.
Here.
All right.
All members of the commission are present. We have a quorum. With that, I would appreciate a motion to approve the order of the agenda, and that is to hear the 2022 audit by Eide Bailey.
So moved
So
by
moved.
Brad.
I'll second.
Brett? I have a motion and by Brad Olson, a second by Robin Anderson. Is there any discussion? All those in favor, please signify by saying aye.
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 Opposed? Motion carried. Thank you. With that, I'm going to turn it over to our city administrator, Mr. Dustin Scott, for the introduction of the presenters from Eide Bailey. Mr. Scott?
Well, thank you, Commission President Dardis and commissioners. Appreciate you accommodating our virtual meeting today. We didn't quite know what the weather was going to do, and we scrambled on Friday to set up this virtually so that we could ensure that we get through this presentation today. With us from Eide Bailey, we have both Brian and John. So with that, I will turn it over to them to walk us through their executive summary for the 2022 audit report. Brian?
All right. Thank you very much, Dustin. Good to see everyone virtually today. I am Brian Stavanger, partner with Eide Bailey. As mentioned, John Hagan, who is a manager, is also on this call. I will be leading the presentation. John is there for support as needed. Being that it's virtual and a bit more challenging from a discussion standpoint, I'll make sure to pause almost on every slide just to make sure there's ample opportunity for comments or questions as we work through this. Also, if I am talking over any topic on a slide and you have a question, please feel free to interject immediately. I want to just make sure that this is beneficial for everyone on the call. So what we'll do today is walk you through this executive summary, which is a high-level summarized version of the audit results for 2022. This is what we've presented historically since we have been the audit firm for the city. There are fully issued audited financial statements as well as a management letter. I have those available if we need to jump into those, but this executive summary is intended to give you a high-level overview as well as up to 10 years worth of historical information so you can identify trends and activities in the various data points that we're going to be presenting. So with that, I'll get started.
Hey, Brian.
Yes.
Just want to make it well aware that the 2022 audit report is available on our website. So for those that don't have a copy, they could certainly go to our finance page on our website and view it there. I'll kick it back to you, Brian.
Okay, thank you. First slide here, I'd like to do this periodically, really more of an education session, because when you hear the term audit, it can be misconstrued. And the reality is there's a variety of different audits out there. So really want to be very clear on what our role is during this financial statement audit. It's an annual reoccurring audit, really required by not only the state, but also usually the federal government, depending on how much you receive and expend on federal grants. And our duties are really to ensure that what is being provided to us by the city and indicated by them as the financial results, our duty and responsibilities in this financial statement audit is to really verify the accuracy of that information. So we're really given information, and our job is to verify the accuracy. Ultimately, this is all being done to provide credibility to a variety of stakeholders, be it bondholders, being commission members, being management, being citizens, being the state, being the federal government, all ensuring that the information being provided based on our audit, we determine it to be accurate. Our audit, as indicated there, is not particularly designed to detect fraud. That really is much different than a fraud audit or a forensic examination, which is laid out here on the right. While we have responsibilities to understand the risks of fraud occurring, where there may potentially be areas within the financial statements and within the city that are more susceptible to fraud, leading to just increased risk and usually increased procedures over those areas. Our procedures, according to the standards that we follow, are not technically designed to detect fraud. So there certainly is a component and a consideration, and we do things that are based on our attempt to increase our procedures over areas that have potential for fraud. Again, it's not our intent or design of our audit to detect fraud. So very different than a forensic examination, which is really intended to find items that potentially are not included in the financial statements and should be. So very, very different. So I always like to point that out. Sometimes more in-depth discussion like I did today, but definitely want to pause there before we get into the results of the financial statement audit. See if there's any questions surrounding that or any comments to be added.
Any time where,
I unmuted you, I'm sorry, you're good.
at any time during your work that you were doing, was the staff unable to provide you with any documentation that you requested?
No. Because of the turnover situation, mainly in the finance department, it probably took a little longer than normal just because they weren't there during 2022. But ultimately, we were able to be provided with the information that we requested.
Thank you.
All right, move on. So we're going to have a few slides going through the results of the audit for fiscal year 22, as well as any findings. And then after that, we'll get into some graphs, which is really illustrating the financial results and standings as of the end of 2022. So really first want to go through what our objectives are. There's really three different standards that we're following when we were conducting the 2022 audit. The first one, generally accepted audit standards. This is if Eide Bailly or any other public accounting firm, CPA firm, are performing audits, we at a minimum have to follow these. So any manufacturing entity, a gas station, a city, we're following these standards no matter what. When it comes to usually local governments have to follow another standard, which is government auditing standards. That's more compliance driven as well as control driven. And then the very last one, this Title II of the U.S. Code of Federal Regulations, has to do with whenever a local government expends more than $750,000 in federal grants or awards, this is a separate or additional set of standards that we have to follow. So really three different set of standards that we're following, which is consistent with previous year's audits. When we're doing this audit, we're designing our procedures to obtain reasonable but not absolute assurance That's right in the standard. And really what that means is that we're not looking at everything 100%. We are sampling items and we are focusing our tests on the more higher risk areas. Higher risk meaning where there's susceptibility to misstatements, either higher volume of transactions, higher dollar amounts, or as I mentioned on the very first slide, potentially a higher risk for fraud. So we perform and design our procedures to get to a reasonable assurance level, not an absolute, again, because we're not looking at things 100%, which is consistent with those standards mentioned. Audit opinion, received a clean audit opinion, which is technically referred to as an unmodified opinion, really means that the full audited financial statements that are on the city's website currently, we believe those are accurate and prepared using the correct accounting principles, do not contain any material misstatements, and are fairly presented. Really a summary of what I just said there in that second bullet. And then within that opinion, and I'm going to go through these over the next couple slides, there are a couple emphases of matters, really some unique items in 2022. One would be a new standard. GASB stands for Governmental Accounting Standards Board. They are the standard setter for local, really state and local governments and their reporting requirements. There was a new standard implemented in 2022. I'll go over that on the next slide. Also had a few correction of errors. So previously issued financial statements that were discovered subsequent to those issuances to have some errors that were corrected in fiscal year 22. Which again, I'll go through in much more detail on the next couple slides. I'll pause there briefly, see if there's any questions or comments. Okay, this GASB 87 really is looking at leases as both the lessor and the lessee. This is a new standard required by the GASB to be implemented for all state and local governments. So any 2022 audit that we were performing, these would have been implemented for not only your city, but all other cities, school district, counties, state agencies. So it really does impact your financial statements. Essentially, if you have any lease receivables, which mainly your leases where you're the lessor or the receivable, you've got parking garage and the water tower, cell antennas. So it's just putting that on the financial statements as a receivable, acknowledging that you've got some longer term cash inflows coming related to those lease agreements. Also on the flip side, where you are the lessee, mainly equipment, vehicles, copiers, as well as the library building, that's just acknowledging that you have a right to use asset as well as a longer term liability. So really just accumulating that information beginning with 2022, and then you'll continue to report that going forward. You'll see the impact of those on the right-hand side. Any questions, comments on this implementation of this new standard? Okay. The second emphasis of matter in 2022 was the correction of errors. So we had identified 3 areas where there were previously reported items to be done in error. Summary of those items in narrative format are on, I would say, the left-hand side or the main portion of the slide. And then the actual dollar impact here is on the right side. So unbilled revenues discovered in the water and sewer fund, which were corrected as of 12/31/22. And when I say corrected, that was to accumulate those misstatements over time, get them correctly reported within the financial statements. And as a result of that, it was essentially about $921,000 as of 12/31/22 that was corrected within the financial statements. And then there were 2 items related to some fire equipment purchases that were previously identified as an expense when really they should have been a prepayment due to a down payment for future full purchase of some equipment. And so that was really just a reclassification from an expense to a prepaid as of 12/31/22 to make sure that that's all being reported correctly going forward. So that was a pretty high level summary of those errors that were corrected as of 12/31/22. Want to make sure that there's an opportunity for questions or comments on any of those items that you may have. Okay, hearing none, we'll move into the results of the federal funds audit. So I had mentioned this threshold here, $750,000. This is applicable to any state or local government. If you expend in excess of that in any 1 year, you are required to have a separate, really compliance-heavy audit on your federal funds. Really prior to about 2020, the city of West Fargo historically didn't require this, or at least I should say it wasn't consistently required. Really beginning in 2020 with all of the CARES Act funds, also some significant transportation projects, now has led to in I think the last 3 years, maybe 4 years, probably about 3 years, requiring this audit. In 2022, just under $3 million in total federal awards expended, the vast majority of that being ARPA funds. Of that, almost $3 million, just under 2.8 million was related to ARPA. So that was the most significant, but also some smaller ones. Again, considers compliance, but also internal controls, and received a clean, unmodified opinion over that report. Questions or comments on federal funds audit? Okay, we'll go through the findings, which are broken down into 2 categories, one over the financial statements and one over the federal awards. So you heard me mention that both the financial statements and the federal awards had a clean, unmodified opinion. So you are allowed to have those clean opinions, even if you have some findings. So really, when it comes to findings, we have to determine, is it just internal control related, meaning the processes and procedures have some opportunities for improvement. And in that case, if that's the only identified issues, that can allow for that clean, unmodified opinion. Really, it comes down to where we're going to potentially modify our opinion is if there's compliance issues that are significant, or accounting errors identified that were not corrected, then that could lead to that modified opinion. But in the case of the findings this year, all related to internal control, therefore leading to that clean, unmodified opinion. But I'll walk through these and make sure to pause for any questions or comments periodically. The first 2 on the financial statements, these are repeat findings from 2021 and prior. Really a recognition that as your auditors, we do assist or identify potential journal entries. When it comes to local government auditing, there are some adjustments that are made only at year end, and that is really uniform across most city audits, that internally they're not going to make these month-to-month journal entries. There's a lot of just annual entries that are done. Through our relationship with the city over the last few years, it was really just the city's decision that Eide Bailly, you as auditors, you have all of this information. We're usually not even going to make it internally on our books because it's only a one-time annual adjustment. We're going to rely on you to come up with a calculation of those entries. We will review them and approve them, but really you can handle those. That has to do a lot with the longer term liabilities such as pension and OPEB. OPEB is other post-employment benefits. So just an acknowledgement that we are assisting with those annual year-end entries, as well as we are tasked with actually preparing the full audited financial statements. It's pretty common to ask the auditor to prepare that on behalf of the city, not without the city's input, review and approval, but these first 2 are repeat, and I would say have been common for the last few years. The next 3 financial statement findings are new in 2022, and I'll walk through each one of these individually, and then I'll pause before we get to the federal awards to make sure there's opportunity for questions or added commentary. Segregation of duties, and that really means in any transaction that occurs within the city's financial reporting process, making sure that enough people are involved in that process. So not one person really has control from start to finish of a transaction. And that really has to do mainly with misstatement risk. If one person is handling everything, there's a greater opportunity that there's an error, even inadvertently. You want to have multiple people reviewing and approving, as well as a fraud risk. Fraud can occur when there are limited people involved in any transaction. So when we talk about segregation of duties, there's really two important reasons for it. One is just the limiting or minimizing the risk of misstatements, and also minimizing the risk of fraud. We identified several areas within 2022's financial statements where there was a lack of segregation of duties. Really driven towards there was just so much turnover, not only at the finance director position, but at other positions within the finance department. That really led to what we identified as a lack of segregation of duties in several areas. So as you continue to build out and replenish that finance department, we do anticipate that being addressed, but that was an issue identified in 2022. The next one, material restatement for correction of errors. That's really going back to those three corrections that we identified and reported as prior year items that were incorrectly reported. This is just reporting that formally as a finding. And then the last one, and like I said, I'll pause after this one, is a lack of timely bank reconciliations. So when initially back in 2022, when there was a turnover at the finance director position, and that position was filled eventually in the summer, fall of 2022, really we met with the new finance director, and there was acknowledgement that bank reconciliations were about 6 months behind, and that really continued until they were caught up really in the summer of 2023. I would say overall, the most important thing for a finance department to do, even when there's turnover or not enough staff to complete everything timely, number one should be a focus on timely bank reconciliations. Generally speaking, that's going to identify or minimize the risk of any misstatements, and also minimize, again, that risk of fraud occurring. So really just pointing out that there was a lack of timeliness. They were caught up eventually, but those generally should be completed. And historically, they have been completed approximately 2 to 4 weeks after every month end. Those were our financial statement findings for 2022. Definitely want to pause there before we get into the federal awards, see if there's any questions on any of those, or add any added commentary from anyone.
I have a question. Can you give an example on the segregation of duties? Where did you find that it wasn't being done?
Yep. Yeah, I'll give a few examples. Vendor creation and approval was one area. So whenever the city has a new vendor, just the process to set up that vendor within the system and then pay that vendor through the system, really the duties of setting up a vendor and paying a vendor should be completely segregated, meaning the same person shouldn't have authority to do both. Really, if you have the ability to pay a vendor, you should not have the ability to set up that vendor in the system. Again, minimizing the fraud risk. What we found in 2022 was that there was, I think, approximately 7 people that had the ability to do both. And so really that just increases the risk that an error can occur or fraud could occur. Another area would be journal entries. So as the city operates throughout the year, there's cash transactions. There's also some non-cash transactions. I should say a lot of non-cash transactions that for accounting purposes are required to be recorded and reported. And a lot of times that's done through journal entries within the accounting software. Journal entries should also have that segregation. Anyone who performs or inputs a journal entry, there should be a second person that reviews and approves that journal entry. The reason for that really goes all the way back to the early 2000s. If anyone remembers the Enron fraud that occurred. Prior to that, from an auditing standards perspective, we were not required to review the controls over journal entries. But what was discovered in that Enron fraud was that there was no such oversight, and that is how Enron and the individuals involved with those fraudulent transactions were able to perpetrate and continue that fraud. So that really began probably in the mid to late 2000 era, the requirement for us as auditors to understand that. So any entity that we're looking at, we're wanting to make sure there's adequate segregation over those journal entries. One other area would be payroll. In the payroll area, if there are any changes that are being made to payroll, so an employee, for example, requests potentially a change in direct deposit account, just ensuring that that change has adequate review and approval. Again, an area where misstatements could occur or fraud could occur. So those would be the three areas specifically that I would give you examples on segregation of duties and opportunities for improvement.
And I'm glad that you pointed out that the only turnover we had in 22 was the finance director,
Correct.
as far as I know. So
Correct.
all the other staff were in place. So
Correct.
I'm bracing what you're going to find in 2023 because of the mass turnover.
Mhm.
Thank you.
We
You're
have a few
welcome.
more right here
Yes.
on our end.
My question is timely bank reconciliations. You mentioned 2 to 4 weeks. What is the target amount of time that a bank statement should be done? Monthly, quarterly?
Yeah, it should be done monthly, and really it should be done within 2 weeks following month end.
Thank you.
And Brian, just jump in here. At the end of your audit report, you do have each of these findings listed out in more detail with the condition, the cause, effect, and then a recommendation on improving. So I just wanted the audience to know that they can refer to some of those things in the back of that report.
Federal awards. So the federal awards, we focused our testing on one program, and that was ARPA. The federal testing is really guided by the federal government. There's a little bit of judgment on our part, but for the most part, the federal government, because it's their money that is being spent for any federal audit that we do, they provide the guidance on what programs they want us to look at. So generally speaking, they're going to want us to look at the larger programs so that we get decent coverage of the overall federal expenditures. So in 2022, that amounted to one program, which was ARPA. We did have 3 findings related to that audit, all internal control related. And that is very important to point out because in a federal audit situation, it's very highly driven on compliance or lack thereof. Important, I would say the most important items that the federal government is asking us as auditors to look at is compliance. Are the dollars being spent in accordance with the grant agreements or the intention of what they're supposed to be spent on? So that's number one. We didn't find any compliance related items. These findings were all related to internal controls, which is the second part of the federal audit. They also want to ensure that when they send money to any state or local government, that there's adequate controls over all of those funds. And so really in 2022, an indication that in these 3 different areas for ARPA, we identified a lack of internal controls. So activities allowed or unallowed really had to do with just based on the requests that we made and the documentation and information given to us, we could not identify any formal review process of how payroll was allocated to this federal award. Ultimately, we were able to gain comfort that the payroll that was allocated to ARPA was appropriate and in compliance. But again, that formal level of review, we could not find that in the records. Procurement, suspension, and debarment. This is actually a repeat from 2021. when probably about 5 years ago, there was a revamp made to the federal award system, and one of those revisions was a requirement to have a written policy that has specific items in it as required by the federal government. That written policy was not in place for 2022. It also was not in place for 2021. By the time we've made that recommendation, or I guess reported that finding and made that recommendation in relation to the 2021 audit, 2022 was already about halfway over. But that one we know has been addressed. In January of 2024, at your commission meeting on January 8th, you did approve a policy that now follows and has all the requirements that is needed and necessary. So that one, looking forward, has been addressed, which is good. On the reporting side of ARPA, there was required reporting, and the first report that was submitted had inaccurate information on it. And then again, we really couldn't find that there was any formal review of the information that was being input. Subsequent and really the second opportunity to do the reporting, all of that information was updated. But based on the rules and regulations, we're required to report that as a finding. So some items to clean up in federal awards and specific to ARPA, letting you know that reporting was addressed timely, procurement has been addressed, and the formal approval I know is being worked on for any payroll that's going to be allocated going forward. So that's federal awards findings. Again, all internal control, no non-compliance, which is very important. You don't want to have non-compliance. That can jeopardize future federal funding. But I'll pause there for questions, comments before we move into some numbers. Okay, we're going to add some color to the presentation and discussion now. What you're going to get now is really 10 years worth of historical information. I'll give you some feedback as to really what's occurred in the last few years. But it's a good look back at some trends and what's going on at the city. This first one looking at cash and investments citywide. The only thing it does not include is any cash or investments sitting in the capital projects fund. We have determined, or I'm sorry, we did include all of that. My apologies. This is a straight, what do you have for cash and investments? So you can see really for the last 5 years, fairly consistent level of total cash and investments. At the end of 2022, about 110 million in total cash and investments, a slight increase compared to 2021. You can see the breakout between the green, which is proprietary, which is really water, sewer, and garbage. And then the blue would be everything else, general fund, capital projects, debt service, and then all other city funds. So slight increase in both of those categories, and overall fairly steady within the last 5 years. I think what we like to do is then say, well, that's a big number, been consistent. We like to look at what's called the liquidity ratio, which is a good way to take that total cash and investments and say, well, how does that compare to what you have for current liabilities? Meaning, just after year end, what do you owe on long-term debt, any accounts payable, any accrued payroll? So that really takes it and puts it into a little bit different perspective of, well, how much cash do you have on hand to actually liquidate your short-term liabilities? Looking at this graph, really 1.00, this line here, is really the minimum you want to have. That means for every dollar that you owe, you have a dollar in the bank to pay that obligation. So generally speaking, you want to be above that. You can see really for the first 5 years, you were, really between 1.5 and 2. Jumped up in 2018, came back down in 2019, and then really a big jump in 2020, really related to the school district made a significant prepayment on special assessments, which increased your cash balance. as well as some CARES Act funding started to come in. So peak in 2020 and then slowly really spending down the cash, I would say mainly related to those CARES Act funding and the influx of federal funding. But overall, very strong liquidity ratio, just under 4.0 at the end of 2022, meaning for every dollar that you owe, you have almost $4 in the bank. So that's a different way to look at that cash and investment graph from the previous page. Really, for all 10 years, have good, strong liquidity and continue that trend in 2022. Questions or comments on cash or liquidity? Okay, the next few slides are going to be focused on the general fund. I'll try to remind you that it is just the general fund as we go through that, and then we'll hop into a few other significant funds of the city. A lot going on this graph. This is looking at any revenues coming into the general fund, as well as any transfers in, all broken down within those categories below for each year. Really, you can see just slow, steady growth in revenues and transfers in, really with the exception of a fairly significant jump in 2020 in this category right here, which is related to intergovernmental, which is really federal and state type grants. This would be when the CARES Act grants came in. And so really a big jump in that category and then led to an increase overall. Otherwise, this has been fairly steady, slow increases in revenues and transfers in. Really nothing significant to point out other than I would say in 2022, you can see this blue, which is taxes. That was just an internal change in how the sales tax fund is being reported. Sales tax used to be really broken out individually into its own fund. Starting in 2022, an internal change was made to really allocate those sales taxes to the fund right away that is it should be in. So now an increase in sales taxes in the general fund, as opposed to previously they used to just come in through a transfer. So really just an internal tracking change on the sales tax. Other than that, really no significant change in 2022. Looking at expenditures and transfers out in the general fund. So overall expenditures, fairly consistent, a little bit of an uptick here in other. This other, or yellow, is where any capital related items are in 2022, mainly an increase in capital outlay related to fire truck, other vehicles. The other category that had a fairly significant jump in 2022 is related to transfers out. So every year there's at least a minimal amount of transfers out of the general fund, usually going to either capital or debt related items. In 2022, roughly 5.7 million in transfers out, which was really just an increase in transfers out to the capital projects fund, of which the majority of that was related to fire hall. So transfer to the capital projects fund where those expenses are, and just supplementing the funding for that fire hall construction project in 2022. So I'll pause there. It's a pretty big jump, just to see if there's any questions, added commentary to the general fund. And if there are none, or after we get through that discussion, we'll talk about fund balance or reserves. Okay, so at the end of each year, you have a fund balance. Fund balance, also referred to as reserves. And I'll break those down a little bit for you on the next slide. But it is important to have a fund balance. One, it contributes to a favorable bond rating. When you get rated by bond rating agencies, they're looking at fund balance or reserves, and really the higher amount you have, more advantageous rating you're going to get, which ultimately leads to usually lower interest rates if you're borrowing. Also, the more reserves or fund balance you have, you're going to have more investment income when you have advantageous interest rate environment. Also important to have, if you have any unexpected expenditures, a revenue shortfall, important to have those reserves in place so it doesn't have such a drastic impact on your operations. So it is important to have that. Within governmental accounting, it's just never simple. There's not just fund balance or reserves. It's broken down into a variety of categories. Potentially, thankfully at the city, really you just have two areas which are non-spendable. And this really represents down here. If you have anything in your general fund related to inventory or prepaid expenses, that is going to end up in your non-spendable fund balance. Periodically in the general fund you do, and in 2022 you have a small amount. Otherwise, the only other category that you have in the general fund is unassigned. And unassigned is really what I would look at as your true reserves or your rainy day fund. There are opportunities for these other areas. If you have any restricted funds, funds sent to the city that are legally restricted by an outside party that can only be spent on a specific item, you didn't have any of those. Also, if you have any internal formal earmarks for funds to be spent in the future, that would be in one of these two categories. But again, these middle three categories you don't have any of. So really, let's focus on the unassigned. So as you look at the last 10 years in the general fund, in total, you can see slow, steady growth. As I mentioned, there's a little bit of green every few years, which represents non-spendable, usually fairly insignificant. Had a little bit, which was really 1 month's worth of some prepaid insurance at the end of 2022. And everything else is considered unassigned, or really reserves or your rainy day fund. You can see a fairly significant decline overall compared to previous years, which is really in relation to one, a planned deficit spend in the general fund, but also those significant transfers out in 2022 to move over to the capital projects fund. So really planned spend down of that general fund balance, but nonetheless want to make sure that we point that out and talk about it. So before I go to the next slide, which is really going to take these dollar amounts and convert them to what are those as a percentage of your expenditures or annual budget, definitely want to pause there. You can see they're just over $20 million in your fund balance. Any questions or comments before we get to the next slide?
I have a question. Bailey, do you audit other communities our size, whether it's population or revenues? And
Yep.
with regard to the fund balances and the like, how would you compare us?
Yeah, let me pause my response until the next slide, because I think that's where we can give you some good comparisons.
Very good.
I will respond to that pretty quick here. Overall, at the end of 2022, about 81% of your annual general fund budget is sitting in your reserves, which you can see historically it's been really significantly higher. As I mentioned before, kind of a planned budgeted spend down or deficit spend in the general fund, as well as a fairly significant transfer to supplement the funding of the fire hall construction. But to respond to that question on the previous slide, in 2022, at the end of the year, 81% of your budget sitting in reserves. Generally speaking, there's a couple different benchmarks that we look at. And there is no right or wrong here. I want to be important that point is stated. Generally speaking, if you look at there's a national organization called the GFOA, the Government Finance Officers Association. They have some benchmarking recommendations. They say really you should have no less than 6 months worth or 50% in your reserves. So you can see you're well above that benchmarking threshold or recommendation. If we look at just within the state of North Dakota, the top 10 cities based on population, which I know there's still a pretty big variety there, but if you step back and just say, hey, top 10 cities, which includes yours in the state of North Dakota, their unassigned fund balance percentage comes out to 56%. So just above that GFOA recommendation, and you can see you're well above not only, I would say, your peers within the state, but also well above that GFOA recommended fund balance. Generally speaking, in a city government, because if you look at a county or a school district, just the way that those operations are, they're going to have different, and we've noticed different fund balance levels. Generally speaking, what we see as auditors in similar sized cities is absolutely a target for a minimum of 50%. And usually we see between probably 60 and 70% within the fund balance. So while there's been a decline in 2022, you're still well above, all of those recommended balances, thresholds within the peer groups, and also what we see. So still strong fund balance and reserves within that general fund. What other questions or comments do you have on the general fund? We'll get into some other funds in the next few slides.
Hey, Brian. It's Dustin here. When you and I were going through this the other day, we talked a little bit about, from the auditor's perspective and what they're looking for. There's maybe a difference in what the general fund reserve would be versus, the accounting practices, if you will, of the finance department. So do you want to just kind of walk through that a little bit as brief as you can, but somewhat detailed to make that point?
Yep. Yeah, and Dustin, please interject if there's anything I'm missing or something else you want me to highlight based on our discussion last week. Yeah, it can get fairly complicated to talk about reserves because there's accounting definitions of that. There can be external definitions of that, and there can be internal definitions of that. So it is a little more challenging to have a discussion where we're all on the same baseline because there just are different types of analyses on reserves. This is only looking at the general fund. So this is not looking at a capital projects or debt service where each one of those individual funds also has reserves, also has fund balance, which we're going to look at in the next few slides. So it's important first to understand this is just general fund. It is the main operating fund of the city. It is usually the fund that is the most consistent from city to city. So it's easier to compare different reserve levels. But this is looking at it from an audited financial statement standpoint. It's got all accrual adjustments, accrual meaning non-cash. It means accruing for any year-end receivables, grants or other items that have not been received yet, but you're due to receive. So you don't have the cash on hand yet, but you're going to get it. Whereas internally, I know a lot of internal recommendations are based on more cash or investment driven. Now, fund balance, which is the accounting term, is usually fairly close to what you have for cash on hand, but it's not exact. And this analysis is done based on fund balance, whereas potentially internally, it may be reviewed a little bit different. The other big differences that can occur and are in existence for the city of West Fargo is that from an audit standpoint, we've aggregated some internal funds into one big general fund. Whereas for internal purposes, you've actually got multiple funds that you're tracking. And this is fairly common. Internally, track things a little more detailed. For external audit purposes, it's grouped together. This is consistent with previous practice at the city. But I know when Dustin and I were talking, he was referring to a specific fund within the city's accounting software that they actually look at or you look at as your internal reserves. Whereas for audit purposes, it's actually accumulating a few more funds to come with the external facing general fund. So it's just can be a complicated and challenging conversation and analysis. And I think that's what Dustin wanted me to point out. But Dustin, please interject there with anything else you have or any questions you may have for me.
You covered it well, Brian. Again, just wanted to, I think the biggest point there was that, like you mentioned, the audit is rolling everything into the general fund, into one big fund. Whereas the city organizes its finances through several different funds, i.e. the library, the fire, police, there's our accounting organization, if you will. And each of those may have its own, what's considered to be reserves, as again, the prior finance directors would have chose to organize those accounting systems. Whereas again, the high level of this audit is encompassing everything. So I think maybe where I'm going with that is in trying to draw comparisons to our budget, you're maybe not going to be able to draw and connect those lines necessarily because of the way we've organized our accounting practices, which can change from finance director to finance director.
I have a question before moving on. Do we have a hard stop at 12:30?
As far as Commission President Dardis and myself, no.
Okay. I've got about 10 slides left, which they're probably going to go a little bit quicker than the previous ones, but I'll just continue going. And if we need to rush through any of them to get done by a specific time, let me know. Otherwise, I think we'll be close. Just wanted to make sure. Any
This
other
is
questions
also-
on?
Sorry, this is also being streamed on YouTube, so if anybody does miss the end portion of this, it will be on there.
Perfect. Any other questions? Okay, Capital Projects Fund, really, which is kind of going off the most recent discussion point, which is internally, I should say externally for the audit. This is one big fund. You can see here it's not funds, it's not plural. It's any capital project fund internally, which there's multiple capital projects fund for audit purposes, and really in accordance with the principles of governmental accounting for audit purposes. It's all accumulated into one fund. So there's much more detail behind this internally. Throughout the audit process, we do analyze things down to those details, but for reporting purposes, they are all accumulated into one fund. So this capital projects fund is just taking a look at what are the expenditures for the last 10 years. There's been a lot of activity for sure out of the capital projects fund, a little bit less in the last couple of years, but still some fairly significant activity, roughly $28 million in expenditures in 2022. Really any capital type projects that are non-utility, these are usually funded either by sales tax or issuance of debt. Again, non-utility type projects, those would all be accounted for here. So some fairly significant capital outlays in the last 10 years. The ending fund balance or reserves within that capital projects fund, at the end of each of the last 10 years, you can see there's been a fairly significant change in practice. So really prior to 2018, and really this did lead to a change mainly driven by the Cheyenne Street project, which was a large project spanned multiple years. Essentially, historically, prior to that, the expenditures would be made with mostly existing cash on hand, and then would be what I'll call reimbursed through the issuance of debt. So there would be this negative fund balance, meaning you've kind of spent all the funds already, and then in the following year, you would be reimbursed through a debt issuance or future sales tax collections. That really practice was changed beginning in 2018, and now definitely not as much of a drastic swing. Every once in a while, there's a bit of a negative there, but nothing significant. Just kind of a change in the timing of cash flows reflected here in this capital projects fund. So historically, I would say, even though we weren't your auditor until 2019, the way we would have looked at this is if this just continued to decline, we would have said, okay, something is amiss with your funding strategy. But the fact that it was consistent, and really every year we could look back and say, oh, there was a new debt issuance that was related to the previous project, that would make us feel comfortable. Now, as we look at this, it's much more consistently either positive or very small negative, which that will fluctuate depending on the project. But overall, this is exactly where we would anticipate you to be from a capital project standpoint. Any questions or comments on capital projects? Okay, we're going to look at the water sewer fund, which is combined for audit purposes. And then I think we've got some graphs on the garbage fund. And then we should be through the presentation. Water sewer. So this is taking a look at the operations, and I will point out what all of these mean. Blue is operating revenues. Green is operating expenses without the inclusion of depreciation. So I'm going to try my best to explain what all of that means. This is, I would say, presented this graph more on a cash basis, not completely, but more on a cash basis, because depreciation expense, which is significant, is a non-cash item. So essentially in this water and sewer fund, as you invest into the infrastructure of the water and sewer operations, any of those capital type items, those infrastructure projects, are what we refer to in the accounting and auditing world as capitalized. So if you have $1 million project, instead of showing up as an expense on this statement, it's actually capitalized, or it's shown as an asset of the water and sewer fund. And then it is depreciated on a systematic basis over the life, or the estimated life, of that asset or those assets. Infrastructure assets generally range from, I would say, 30 to 50 years of an estimated useful life. So it takes that $1 million and then slowly depreciates, or a depreciation is an expense. It expenses that asset over the life of that asset. So it really tries to show that when you make that upfront investment, especially in a utility fund, they're going to be fairly significant. The use of that investment is recognized over the life of that asset. So when we look at an operating statement and you look at the actual audit, you're going to see a net loss, but the majority of that is related to depreciation. So I always like to point out, first off, we take out the depreciation. And if you really look at more of a cash basis, you're actually generating an operating income. But if you were to look at the audit and really take into account the depreciation, which is significant, you can see you actually show an operating loss. But I want to point that out because if you're looking at the audit and you see an operating loss, I didn't want panic to set in. You can see this is very consistent. As you set rates, you're likely looking, depreciation is a component of that analysis, but you're likely more looking at what is more of our operating budget, and we want to make sure that our rates are covering that. And that is an indication on this line here. When you take into account depreciation, which is significant, it was over $11 million the last couple of years on an annual basis. You can see it generates it to an operating loss. Questions on that? It can be confusing, so I hope I explained it okay. Looking at ending net position, and you really have to be careful in this water and sewer fund. You probably don't want to call this reserves, because ending net position is really an accumulation of revenues exceeding expenses over time, as well as any infrastructure investments that you made. So of this amount, which is roughly $325 million in net position, about 96% of that total is actually related to infrastructure or capital assets. So really, if it's an investment in the infrastructure operation of that fund, which you can see over time, you've invested a significant amount of money into the infrastructure. So you really have to be careful looking at water and sewer fund reserves, especially from an audit standpoint, because so much of it is infrastructure. The difference being in the general fund is that the general fund does not report infrastructure in that manner, which can be confusing. So in the general fund, it really is more looking at reserves, whereas in the water sewer fund, you really want to be careful. The more important item to look at in the water sewer fund is cash and investments. So as I mentioned on that previous slide, roughly 96% of that total was infrastructure. The rest of it, for the most part, there's some timing differences, but for the most part, it's going to be cash and investments. So you can see here, roughly $13 million in cash and investments in that water sewer fund. It's really been slow, steady growth the last 8 or so years, fairly consistent the last 3 years, and even a slight uptick in 2022. But from an audit standpoint, and I would say just from an operational standpoint, good to see that steady balance of cash and investments. Any questions or comments on the water sewer fund? Okay, just a few more slides, this time focusing on the garbage fund. Garbage fund, taking a look at operating revenues compared to operating expenses. Now, the depreciation in this garbage fund is not as much, or does not have as much of an impact as it does in the water sewer fund. The infrastructure just really isn't there for garbage. It's more equipment related or vehicle related. So I did not exclude that from this calculation, but depreciation is included. So important to understand that. So the blue representing revenues, the green representing expenses, which you can see those expenses are listed out here, including depreciation. In 2022, did have a slight operating loss of about 255,000. Net position, which is about 65% of that is capital assets, infrastructure, vehicles, equipment. So it's more cash related, but still you got to be careful. You really don't want to look at net position in the garbage fund and analyze that as your reserves, because there is a lot of long-term assets in there. So cash and investments, again, going back to, let's just look at cash and investments, which is essentially the difference between the capital type items in your net position and the total. For the most part, fairly steady the last 4 years, a slight decrease in 2022 due to some capital outlay for a garbage truck, but overall still a good positive cash and investment balance in the garbage fund. So with that, I think I want to make sure I open up one last time an opportunity for questions on anything that I discussed within the executive summary, or any other questions you might have related to the 2022 audit. Hearing none, I would say a big thank you to everyone involved to getting to this point. There were definitely challenges throughout the process, which really had to do with turnover, and then just the challenge of people not even involved in the 2022 operations, having to help us from an audit standpoint with questions we had. So really appreciate all the efforts there. It was a lot of different people involved to help us get to this point, and happy we were able to issue and finalize the audit and present those results today.
Well, thank you, Brian. Appreciate very much you going through this with us. And I do appreciate the significant amount of emphasis that you put on the effects of depreciation on these auxiliary fund type things, water, sewer, and the like. That's sometimes difficult when you're looking at the data to understand how significant effect that has because of the long-term investment and those assets depreciating. And I think some people have when we look at some of the numbers strictly from a revenue side and a expense side, the depreciation can be a significant factor when you're doing your analysis.
Anything else?
Item number 5.
Commissioners, if you have any additional questions, now is the time to ask them. Otherwise, I'm gonna ask for a motion to accept the 2022 audit results as presented today.
I'll make that motion to approve.
Thank you,
I'll second
Commissioner.
it.
Commissioner Olson seconds. Been moved and seconded to accept the 2022 audit by Eide Bailey as presented on March 25th, 2024. Is there any further discussion? Is there any further discussion? Hearing none, all those in favor? I'll call for a roll call vote, please. Madam Secretary?
Commissioner Dardis,
Yes.
Commissioner Simmons,
Yes,
Commissioner Olson,
Yes.
Commissioner George,
Yes.
Commissioner Anderson.
Yes.
Thank you, Commissioners. Commissioner Simmons, may I have a motion to adjourn?
so moved.
Commissioner Olson?
Second.
We have a motion and a second to adjourn.